This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview.
Well, we're joined today by Quinton Van Der Burgh, who is sitting on the board of Marula, Shuka, and also Neo Energy Metals as well. It's very good to meet you in person, Quinton. Of course, we have just been at the stock exchange for the IPO of Neo, and it's good to meet you in person. So, first of all, just tell me a little bit about yourself. I want to know a little bit about your background, where you sort of come from.
Thanks, Mark. Nice to have actually witnessed the opening of the stock exchange today, firstly. Neo Energy is obviously quite close to our hearts as a group. A little bit of what we do, we come from an extensive coal background and energy background. Been in the coal space for 24 years. We've developed multiple projects. To date, 47 mines that we've either developed, sold, or mined out during our era. So was part of several large groups that we formed multiple mines at any given time. We either offloaded that or we sort of just mined it out over a period of time. So we have a very good and very extensive team technically, technical sound in the sense that we understand from pit to port operations, we understand how to mine, we understand the logistical side. The complexities of mining within Africa is very important to note. A lot of people come in and much like any other countries, they would get chased out very quickly and they don't quite know the lay of the land or how to work within the dynamics of Africa. So we're quite familiar with the land. We're quite familiar with its complexities and issues. We've worked through them extensively over the years. We've got a very good foundation when it comes to understanding what to do to get a product out into its end form. From our processing facilities that we have, very good metallurgical team. We've got a very good geology department and a very good security and operations team. So very familiar with mining, I think expertise. We've got several mine managers that have been in the game for 30, 40 years, old school, understand chasing sort of targets. So I think that's where we come into it to add value to these specific companies. We're boots on the ground and we want to get the job done. Mm-hmm. We're not here to play the markets. That's probably the last thing we want to do. Mm-hmm. But we're engaged on that level at the moment and we're going to make the most of it from a reputational standpoint. We want to deliver the best and obviously put all our skills and sort of understanding of how to operate these mines moving forward. Okay. We've moved heavily into the metal space, as you're well aware. And I think that's the three companies you just mentioned that we got into bed with fairly early in its days. Obviously, a lot of them have been going for 10 years now in project base. And we came on at 99 to kind of solidify that play, to take it to markets and see how quickly we can get these operations into profits. Mm-hmm. Which is critical for what we do as a private company. We've never been listed, never been a public company. We've never sought funding from anyone. So our main operational mandate here is let's see how we can get these mines operational, and we're going to try and control that pit to port and end customer scenario internally. Okay.
So just tell me, where did you grow up? Where were you born?
I was born in Witbank, a small town just outside of the main city, Johannesburg.
Okay.
I was actually born in a coal-bearing town, so a lot of coal mines, Anglo America predominantly mined, and Glencore and various other major mining, Zoro. Okay. So the 4 or 5 majors out of South Africa was the town that I was from. Okay. So I was brought up looking at black coal dumps, and I was wondering, how would that ever even happen? And it was an interesting story that I had to go to London to come back to realize I was actually in the game of energy. So
has the family always had a history in mining, or were you the first sort of move into it?
No, so obviously came from a trading background and in London for 6 years and found the opportunity back in South Africa when the mineral law changed. Okay. And it gave the opportunity to groups like myself to get in on the grassroots, greenfields, prospect and develop, and we were quite aggressive about approaching prospecting licenses and seeing how we can put money back into South Africa to develop these projects. So I was doing quite well in London, in the business that I was doing in London. And I took a lot of that funding back into South Africa and to develop my first projects. I was involved with my brothers at first, and through that, we separated over a period of time. I was always a project-based guy, so developing a lot of projects. They were obviously boots on the ground, physical. One brother was extensively in the mining equipment side. My other brother was very commercial. I had a sort of a suite of those abilities, but we obviously separated over a period of time. And I think over the last probably about 10 years, I've been on my own.
Okay.
Yeah.
So you've built a private company out in South Africa there. You say you've got sort of 47 mines, I think you mentioned earlier.
Well, we've developed 47 mines. We've sold off a lot of those projects to listed companies at its time. Back when coal was the flavor of the month and everybody was investing quite aggressively in coal at that stage.
Okay.
A lot of listed companies approached us and we developed those projects for them, and we kind of managed a lot of them as well, during getting the contracts in place, getting the mining in place, getting everything in place. That's really where our forte came. Never really saw that it was going to go towards metals, because I think the big boom at the moment and everyone's hot topic at the moment is metals, green energy. Banks, institutions, funds, everybody's throwing money in that direction at the moment. We believe it's going to be a bullish market for the next 5 to 7 years. Past that even further, but I'm not going to have a glass view here and say it's going to be magic. We don't quite know. The volatility of commodities has always been a real thing. It's really market dependent and how people view it at the time. At the moment, your hot topics are obviously uranium, lithium, copper, graphite, graphene, titanium, cobalt. So those are the suite of assets we're kind of developing as the QGC group, and looking into relationships with groups like Marula, Neo, and Shuka that have brought opportunities to us that we've been able to advance on. So really where we came into it was we obviously were the bank, and we make sure that it's going to get up to operational status that we're happy with. We apply our full technical team, mining ability, everything to those projects. So that's where the marriage came to be quite solidified. They'd taken it to a certain point, and we came in to say, listen, we believe we can add value, and we believe we can add value to produce an inline product that we can make a profit. And I think that's the most important thing when it comes to the stock exchange. People want to see results. I think that's where there's a little bit of bad sort of, I'd say energy in around a lot of companies that list but don't really take it past the point of getting to mining and producing and, showing the shareholders a constant uptick in what results were spoken of and delivered upon.
And that's what you want to help achieve here, because your history there is obviously is a private company, QGC, but now this is sort of a move for you to the public markets, isn't it, with your board positions? So you feel it's the right time for you to do that? And I mean, thinking back to your time, your earlier years in London, you said you were into trading. You obviously have an understanding of the markets, a like of the markets, presumably. So it's just the right time for you to move into more of that, let's say, public role?
Yeah, I mean, listen, for me, it's a very unfamiliar world being part of the stock exchange. It's never something I really wanted to do, to be quite frank with you. I'm a physical, hands-on type of operator. So being private, being able to operate at high yield profits, and that's how we've developed our group over a period of years. So we're all about results. If we don't have anyone to turn to. We don't have the markets to turn to. We don't have money to call on. So it's a very different world, and we don't really want to go down that road either. As a shareholder in these specific companies, we're not going to dilute our position. We're not going to float any of our shares to be sold over this period for the next couple of years, because we believe we understand what we're building. We understand the assets we got involved in. We understand how lucrative they can be, and optimizing them is just bringing that skill set together, what we're going to do anyway. So being on the exchange or not being exchange for us is not going to make a difference.
Okay.
For Marula, for Neo, and specifically for the reputation of those projects, it is very important. And I think that's where we stand good to support it. And we're here to make sure that, the Marula investors and everybody that's getting involved in these companies, we have to stand good for that. And our company, as a private company, wants to show results, specifically to Jason and the board members. So we kind of want to just be a value add type of situation. And for us, like I say, we're not going to release any of our stocks in the company anytime soon. So if you can get shares, good. if you're not able to, that's the reason why. We're in a position that we're strong enough on our own not to have to raise that money in the market.
Okay. Then would you say that you're a mine builder? That's your focus. That's what you want to do.
100%. So that's really where we come from. We're, like I say, we build mines, we build operations, we build logistical solutions. We're a very technological group. So I come from a technology background as well, from a technology firm that we own. And we integrated a lot of that sort of technology over a period of 10 years as to how we control stockpiles and how do we have stock movements and the quality analysis and how do we analyze stockpiles on a daily basis to get qualities right. We very rarely, as in almost never, have a failed shipment, because of how we manage the day-to-days and stock movements and controls and security. So we bring a lot of that, sort of hard knocks that we've had over the years. I'm talking in the earlier days. We've advanced past the point of what the majors even operate in that space. We're very sort of accustomed to daily controls and what we can move on a daily basis. And we do our scheduling weekly. We understand what to move on a weekly basis. We're chasing a target on a weekly basis, not a monthly basis. So we're very driven when it comes to results.
And just thinking back to sort of how things started, if I can, the QGC. So you sort of started in the trading world. Of course, building a company like QGC, a mining giant, I believe it is, over in Africa, probably not known so much over in the UK. That's not easy to do. It requires a lot of money. How are you able to do that?
So like I said, we started small, started our first operation, very complex underground water sort of project. So we come from a situation where a lot of our first projects we launched were probably the most complex and complicated projects in the world, I would say. So getting into a project that is open cast, it's a solid seam, it's very easy for us. You apply the same methodology, but a lot less issues will come out of it. We started with one mine, we ramped up to two, and one of the very most famous questions ever asked to me from one of my mine managers at the time was like, Quinton, you're going to 3 mines now. What now? How are we going to do this? Well, I'm just going to get another one of you. I'm going to acquire the best skills and the best people to surround us to build the company. And we kind of were very driven on that sort of mindset. We from reference base of people that we've worked with in industry and people who work for us, they refer only the best caliber to us. So we kind of, it's the same application we apply to each mine. There's not a situation where if we have 10 mines, we're going to be stretched. Not at all. Because the way we apply those structures are in their modules. And so it's like, this is how we apply all of those 5 factors from your pit to port logistics, security, and sort of analysis. And that gets applied to each one, and we have project manager teams that would actually run those processes on a weekly basis, and then we'll have one major board meeting on every week pretty much on running those sort of understandings of what needs to be approved, what doesn't need to be approved. So we're very agile. We know how to move quickly. We don't wait for several approvals to kind of like, wait for red tape and things like that from boards over 3-4 months. So running as a private group has been very good for us to build a bigger company. And I think over the years, we did it out of our own cash. So, we haven't gone to raise bank debt for projects. We kind of did it out of cash, and we developed from greenfields, and our yield on that's been thousands of percents. You can imagine, you're getting into a project at hundreds of thousands of dollars, if not millions of dollars, and you're developing a multi-billion-dollar asset, over a period of years, of course. But that's the hard hits a lot of the big companies don't want to go through. They want to kind of take a project where it's got its feasibility, it's got a measured JORC statements, all the things that we're doing on these companies, funny enough, I've done for many years. So a lot of the companies we acquired took it up over 10 years, and we just came in at 99, where I used to do that at the beginning, take the value curve all the way up, and then see whether we're going to mine it, offload it, or sort of do a deal with one of the majors in the market. So we're kind of coming as the intermediates, there's no real class for what our company is classed at the moment. There's a small juniors, there's the majors, and we're kind of coming in between to cement those two worlds.
Okay, interesting. Okay.
Yeah.
Well, what you said earlier on there about, getting how we're going to do this, well, I'll get another one on View, for example, sounds very much like an very entrepreneurial mindset, which I get the impression you have that. We've been with you just throughout the day, and you've been on the phone to people, you've been messaging people. That is what you have to do as a businessman and an entrepreneur. You always have to be on it, and you have to be getting people to delegating tasks effectively and managing those very well.
I always said you got to eat, sleep, drink your business. If not, you're going to be failing in the years to come. It's 100% guaranteed in my world. Yeah.
So first of all, there's a couple of questions there, because I like sort of the entrepreneurial stories. I think they're quite inspiring to people. So your early days, you said you funded everything yourself. Did you have early success then with your trading, that you were able to get money?
Yes. Listen, I came to London with £1,000, lived in a house with 14 guys. It was my first job that I had in the UK, trading, and worked from 4 a.m. till 12 at night to show my boss that I was the best at it. And I did very well very quickly. I did a lot of international trades, where unfortunately at that stage he never paid me my commission, and for 3 months, and I was almost on breadline. So I got a lot of respect for money. I was from a young guy working in stores and counting money and various things. So I come from an entrepreneurial family, entrepreneurial background. We weren't a wealthy family, but we were a middle-class business family. And so I learned the hard ropes from a very young age. And going to London was the same hits that I wasn't going to take failure as the norm, right? And it was easy to run back home and go live a normal life. And I was always chasing that great success story. So, coming across the Steve Jobs and coming across various people when they were in the garages is kind of like the idea behind an entrepreneur. There's so many great opportunities out there and good ideas. You just don't know when you're going to come across that person, and you're going to look back 3 years and say, I met that guy, he needed $1 million. Now look at them today, the success stories. But I also understand that, you can have the best idea. It's irrelevant. It's the jockey and the guy that drives it, the passion, the knocking down the doors 1,000 times, not giving up, is really the guys that make it through to the end. And you look at all the success stories in the world, they got the same story. It's very similar to you're reading someone's book, and I always say, you don't read someone's book and try and copy that person. You make your own book. You make your own success story. Your path is not defined. You don't quite know where tomorrow is going to land up. But as long as you keep driving and you have passion, you have aspirations towards achieving your goals, never give up. Then look where you're going to be, in 3, 4, 5 years from now. So I have that mindset I get into every single day. I start positive. I make sure I'm talking positive, and I positive vibrance with everybody that I talk to. But then, through the day, your day crashes, and 10 issues come up, and boy, you end of the day going, okay, I don't want to start this like tomorrow. And you got to just understand how to adapt, and you can't do anything about the past. You can't do anything about the day you just had, but you can learn from those lessons. And I think that's the hard school of Knox, is getting involved in guys that have been through it, understand it. They can write the book, but they didn't go to university for it. They don't have the degree for it, which in some worlds, my world specifically, you can come with the best degree in engineering or mining. If you don't know how to work through that day and understand the complexities that are going to hit you and how to micromanage them and how to process very quickly, which is very few people can, there's inevitable failure or a lot of stoppages and blockages when it comes to the success of those projects. So that's where we bring a different dynamic. I bring an entrepreneurial side to mining, and we find angles and sort of versions to optimize opportunities, I think is the right word. You have a specific product range. People say, oh, that's my product. We find a way to mine it differently, to bring out extra value without, high strip ratios and various things like that. So we bring that skill set as what we've understood to optimize and maximize profits in companies. Okay.
What's a typical day for you? I guess it's probably not a typical day. But what gets you up in the morning? What's your drive? And then how long are your days?
So on a typical day, firstly, I don't sleep. And people say they don't sleep, but I literally have to take sleeping pills and various things just to get 3 hours.
Really?
Yeah. If I lie down for too long, or if I sit for too long, I get sick. I kind of get very anxious. So I've got that type of thing where I've got to keep moving. If I'm even settled and resting, I'm pacing. So I've kind of got a million things going through my head. I have to have it all in my head. I can't release it on a piece of paper. So I kind of understand every number, every digit in the business any given time. I'll, repeat conversations and repeat calculations. And that's kind of like it's just a very weird way of managing your thought processes. But wake up early in the morning. I'm very diligent at my schedules, training, getting a healthy breakfast in, starting the morning with various calls, and then getting off to the office and having my meetings back to back until probably early evening. Probably 2-3 years ago, it was up to 8, 9, 10 o'clock at night. Get home, still on calls till 11, 12, because of different time zones. You're dealing with different countries, different time zones. So when someone's going to bed, someone's waking up, I was used to it from trading with Asia and various other jurisdictions where, we're going to bed, they're getting up, or, they're already up, and our days needs to start at 3 o'clock in the morning. So it's an interesting world because it's not for everyone. A lot of people are structured on a 9 to 5 and they enjoy that life, and it's a comfortable life and good for them. It's I probably would look at it today and go, is it worth it? I'll probably say no. Be careful of what you wish for, and be careful of the responsibility you take upon yourself. If you're a good businessman following good business practice, it's never an easy world to navigate. It's a complicated one, to say the least. And I'm all about people. I'm all about my staff. I'm all about people that we can grow. Communities, foundation is what we're very, very astute to in South Africa. We kind of always trying to make impactful sort of changes and projects. So we come from a complicated and complex country, where unemployment's at 38%. I believe it's even high if you talk about statistics with non-registered people in the country. And there's a lot of desperation. So we see it everywhere. We see it all day. And, from just what we do, we try and do as many community projects back into these people. And my foundation is very, strong in South Africa. We do a lot of active projects, and we do it ourselves. We fund it ourselves. We don't raise from anyone in the world. We've had a lot of offers. We just don't take it. Our basic comeback for that is, listen, if you really want to make this change, please have a program in your company. This is the kind of things you can do, and go and do it. If you're truly passionate about changing people's lives, then you must get impactfully, or you must get involved yourself. So
you get up early in the morning, you do your fitness routine, have a good healthy breakfast, back-to-back meetings, pretty much phone calls the rest of the day.
Yes.
How many hours sleep do you get?
I try and rest for about 6 hours. So I'll either rest, lie down. But I mean, my solid sleep is 3 to 4 hours if I'm lucky.
Really?
Yeah, and I know that's not healthy. And I know
do you get tired?
Funny enough, no. I'm like jumping rabbit in the mornings, and I've got too much energy. And
you sound like
no coffee. No coffee.
No coffee?
No coffee.
Wow, I need my coffee.
I enjoy smelling coffee. And I enjoy maybe a sip, but I do not drink a lot of caffeine and stuff.
I think it's rare to find that. I mean, you remind me a little bit of one of my big inspirators, people look up to, Elon Musk, because he doesn't really stop. And he said the same thing. Is it worth it? I mean, at what point do you sort of say, or do you never say, I've made it? I mean, do you have an end goal? Like I asked you before, what gets you up in the morning? And maybe you can't answer that. Maybe it's just, it's always going to be like that. Or would you be satisfied?
I think I've been asked that question many times, and I think my answer is always going to be the same. I think, serial entrepreneurs like Elon and various other people, I'm not going to put myself in the same class as anyone. He's done extremely well in his career, and, he also had crossroads. He also had a tricky one going left or right, and he made the right choices and the right investors, and he is where he is today because he deserves it. And, a lot of people don't understand those hardships he had to go through to get to the point of where he is today. And I think it becomes about, serial entrepreneurs have got a sickness. We're never going to be solidified and happy with what we're doing. And the result is we always want more and more success because we're always believing we're not there yet. So we don't quite believe we've arrived at where we believe success is really the answer. And the success word is probably not even in the equation anymore, because what is success truly? Are you fulfilled in your life? Have you got everything that you want, from family to love to various things like that, which a lot of serial entrepreneurs lack that part of their lives. They have to either discount it or sacrifice it. And it's a really difficult thing to say that, because you hurt a lot of people along the way with the success drive that you have. And it's early mornings, late nights. It doesn't mean your mood's always going to be good. Doesn't mean that you're going to be the most optimal. Doesn't mean that you're going to be there for somebody. And a lot of times you're not in the right mindset, right? So you're consumed by problems and issues and resolving those issues. And I think it becomes a power play eventually. With certain people at a specific bracket, I think it's about power, not about money anymore. You know, Elon can retire 50 folds over, right? Why is he still doing what he's doing? So he either wants to make impactful change to the world, which I believe he does, and there's various things that he wants to do to still, you know, get to where he believes his company can go. So it's about now proving to himself that he can succeed at the things he's set out to do and the things he's spoken about. Because it's difficult as an entrepreneur. You sit around the table and someone asks you something. It's like, you're going to do that by next year. And you're like thinking back, wow, okay, now I've got to do it. You know, like, you know, there's it's literally someone's tasked me and someone's challenged me. And because they challenge you, you've got to over exceed and over excel. So your objectives are not 10%, they're 100% on year, where most people have got a 6 to 12% yield. That's good growth. You know, where serial entrepreneurs are like, no, that's not good enough. It's never good enough. And that's the unfortunate part is,
Yeah, indeed. Well, let's talk a little bit about the companies then, because that's really what we're here to do. And so what is it you'd like to achieve with the companies you're involved in? I mean, you've mentioned there you've got a lot of experience in building mines. Of course, you talk about being a very technologically advanced firm, talking about stockpile management, that kind of thing, and team building as well, getting the right people in.
Yes.
So, I mean, do you have specific objectives you want to achieve? Do you set them out for example, Neo and Marula?
We do, yes. Getting involved in the companies, it's always a very stringent DD process we go through. We sit around a table with 24 senior managers. We strategize about what the opportunity is, where we see the market, where we see the opportunity going before we make that investment. So obviously that's the first point of departure. We got involved in Marula first with Jason. And very thankful that conversation happened, because it was one where we were supposed to invest in the stock exchange, and it was brought to my attention as an investment. Okay. I then made it very clear that I'm not an investor. I'm more of a miner and more of a guy that wants to get involved in equity and develop a company to be proud of that company. We had one conversation, myself and Jason. It was set up by my office, and within the first conversation we struck a deal. It was really that simple for me. I saw the opportunity from my geology team and various people that told me about what was in Marula, and I was very taken back by where the obviously company was on the valuations and where it potentially needs to go. So, talking to that is that we see a massive opportunity in Blesberg, the lithium, the copper, QGC, the graphite, graphene. Marula sitting on, in my opinion, Class A assets. They needed to be proven. They needed, obviously, drill funds and project funds to get into those projects. We very quickly funded machinery, equipment, plants, infrastructure. Our air plants actually arrive in December. So we actually start mining the ore body in December. We've just done a whole geo mapping, so we understand there's many strike rates. It's a 52,000 hectare property. We've just drilled up first 2 hectares. There's another 4 hectares we're going to be drilling, proven up our just under 1 million tons of lithium. And we understand that belt continues, so we're going to be drilling up a lot more lithium. I believe that there's a lot of value still to be created in Blesberg, and we knew that from when we got involved with them. So our whole idea was, guys, we need to prove up, get it to chalk. We understand the complexities of listed companies, but for us, it's about mining that ore body. If you look at the economics of that, mining 25, 30,000 cubes, potentially getting 4,000 to 6,000 tons of spodumene, the numbers are quite big. And we want to prove that model out by December, January. So December, January, we should have our mine plans, financial models, and everything to prove up our cash flows. And that's going to really make the difference on Marula, just that lithium project. Never mind the copper project, which is extensively also had a lot of work done on it. And there's a lot of sort of aspirations towards proving up a large ore body of copper there. And remember, on all these projects, they are low strip ratio, easy accessible. They are not complex projects. where a lot of the majors get involved in complex. I'm not interested in complex projects. I'm not involved in underground mines. I don't want to capitalize the $1 billion to get started. These operations are very easy to get started. Plants and infrastructure, like I said, already been ordered, and not even to the detriment of Marula or its shareholders. So we're about optimizing profits on that project, and we want to get into solid cash flows from January, February already. So that's how quickly Marula is going to be bolstered into the market. Saying the same thing about the copper. We're getting a pilot project of that started now in the next couple of weeks. Small plants going up. We're going to be proving up the actual copper content. And then the larger part of drilling and getting it to JORC is going to be over the next couple of months, which we've already scheduled. So another value curve that's going to be bolstered onto Marula. So yes, we knew what we were getting ourselves into. We knew what we needed to do, and we knew from a mining point, that's where we're going with Marula.
Okay.
Similarly, Shuka came along as an opportunity, and announcements will be made soon on Shuka as far as where we see the value being added, and it's obviously adding projects into Shuka. So we've got projects identified, drilled, various project stage, which is at bankable, and we intend to get these projects into Shuka and mine them in the 2024 period as well. So all of these things we're mentioning, from Marula to Shuka to even Neo, all of them we want to get started in 2024. So these aren't prospect companies. These aren't long-term blue sky 5 to 7 year view, which a lot of listed companies are. We're very different. We only wanted to get involved because we can go mining. Because we could create the value. I didn't see the value at that time being involved in a exchange because we were financing it anyway. So we weren't there to raise money. We were there to really bolster value.
It was the opportunity that you saw.
For sure.
You say that they're all Class A
in
projects.
my opinion, 100% Class A.
And you did the deal very quickly.
Very quickly when we knew the deal was on the table, yes. Jason obviously, had to go two ways. He had to go the stock exchange, which he did, and they could raise money in increments, where we came along and said, listen, how much money do you need? We did a feasibility on how much money you needed to get those projects to where they needed to be. And we said, listen, we're funding it. Like, fully getting involved. We want to fund it. We want to get involved as an anchor sort of shareholder, and we want to add value to his current project team, which was already good. They already had everything mapped out themselves. They already knew exactly where they were going to go tackle this ore body. Mining plans, everything was scheduled. We just came along and verified and added value to getting it quicker. So what might have taken Jason a year longer, we've brought that time period forward, basically.
I really liked what you said about it's not complex. It's easy to start because, we interview a lot of mining CEOs, companies around the world, all sorts of different jurisdictions, different ore bodies, different deposits. What I know, and I think what a lot of investors know, is mining is very complex. And it's also very risky.
100%.
A lot of projects just will not go anywhere. And when I first started talking to Jason, I must admit, I thought, this sounds a bit too good to be true. It can't be that easy. But, that was a while ago.
Yes.
And Jason has been delivering on what he says. And talking to you now, listen to what you're saying. With your vast experience here, your entrepreneurial mindset, you're not going to get involved in something that you don't feel is, as you say, Class A. So it really is that, they really are that compelling, and they really are that. And you said before, like pit to port. That's what you want to achieve here. And you really believe these projects are set up to do that.
Yes. So I think that is the difference where we're coming from. Look, you can have a complex mine, BHP Billiton, one of the majors can build. They're going to spend $1 or $2, $3 billion getting involved. Their return on investment is going to be over 4 to 6 years. It's larger developments. They take 5, 7 years to go to market. It's complex. In my opinion, that's the risk. There's so many anomalies in it. A lot of them are very big underground mines. There's very few projects. That's why I call them low-hanging fruits. It's Class A because I'm sitting there going, you can have this lithium project that's potentially a few hundred strikes, but let's call it, even if they come up with 10 or 15 very good strikes under this project, there's potential for multi-million tons of lithium here. Open cast, easy extractable, low strip. So it really doesn't matter what happens to the market. Even if lithium has to half in price, we're still going to do very, very well out of it. So that's the difference between us and a major mining is that we don't need to be scaled up to doing 50,000 tons of lithium, which is mega project, of course. But I'm saying, we can do 20% of that, 30% of that, but be more profitable because our costs are so low. We're very lean. We don't have a major overhead structure like they do. And we're able to operate where they can't operate. They don't look at that scalability as even worth their while. But we will be a very profitable company because we're looking at it from a different angle. Where the artisanal miners usually come in and mine those smaller projects, we've added a whole bunch of them technically into one, and we've taken that optimization into consideration, going, you know what, the guy can mine 1,000 tons there, 500 tons there, 1,000. We've taken all those properties and go, you know what, we can also open up multiple pits. I'm very famous in South Africa for opening up multiple pits on one mine. So a lot of guys don't. They look at their blocks and go, they're going to mine one block out and they're going to mine another block out. I look at the opportunity and go, okay, so we're sitting with, let's call it 10 different strike zones, and potentially those are 10 mines, So I look at it as a cost center per pit and say, that's got to make sense. Not as one mine. What a lot of guys do is they mine this block, it's not feasible, that mine's that block specifically borderline, and that one's very profitable. So they take all three together and it becomes out very average. We look at it and go, start this block, does it make feasible sense? Yes, it does. Okay, great. How much profits on each one of them? So we go through, open this one, open that one. So we'll open up 3 or 4 blocks on a mine that should only have one cut. So we can do what they do, but just in a different mindset. Okay. They have major equipment, sometimes even on coal drag lines, various things like that. Their cost centers are through the roof, where we can do mini pit, we call them mini pit operations. So we control the costs very carefully. We understand that has to make sense, otherwise we close it down. And then we have 3 others that make sense, depending on your strip ratios. With the lithium, it's fairly consistent, in the sense that your strip ratio is what it is, and it's a low strip ratio. Copper, same. So we don't have those anomalies. We also don't have 1 kilometer down, where on copper, where you don't know what you're going to hit. There could be a dike, there could be various things, anomalies. That's why people are so nervous about mining stocks, because you don't know the operator. You don't know what's happening on the other side. You can be told a story, but how true is that story? And how good are the guys on the ground operating? That's why a lot of guys will put their money into big listed companies. They're like, okay, my money's safe in BHP Billiton, my money's safe in Anglo America. They've got results, they've proven themselves over a period of time. But to get into that stock, to get into that share at that point, you only got a very small fractional uptick, don't you? Percentages. Whereas you're getting in companies like this, yes, your gains are substantial, but where are you risking it? Who are you risking it with? And I think that's where people just need to do their homework. I've heard of multiple stories of nickel projects and various things like that, where the guys are listing in Canada and they're only going to go to market in 7-8 years' time. I'm looking at this going, I would never get involved. Like 7-8 year view of what? How are you going to sell that? And then you're only going to start mining, and whether that's even feasible at that time. We got involved in these projects knowing they're feasible, knowing that the projects we're going to mine. Whether it's a small scale, mid tier, or very large, is still to be defined. We know that we're going to get X amount of lithium and copper out, but will this turn into a mega mine? My aspirations are yes. And that's where we're going to take it if it's the last thing we do.
Right, okay. Yeah. If it gets there, that's fantastic. But are you really looking at these projects purely from a business and an economical point of view? Will this make a good return?
100%.
Can we keep our costs low? Can we get some cash coming through?
That's the only way we're looking at it. Because remember, we funded this with cash.
Yeah.
So at the end of the day, we want the return. We ourselves want the return. So we're going to chase that return, and we're going to make sure we get into these operations fairly quick. That's why we've moved so quickly on the lithium. That's why we're moving so quickly on the copper. Everything we've touched, we've moved quickly on. Like a lot of guys take 2-3 years to get into a project. We take months. We really are that quick. And not, we've done our feasibilities, we're very technological and we're very technical in our ability to understand projects and understand how a specific ore body moves and how it operates and what yields you get out of it. So we do full feasibilities, of course, and DDs months prior to even talking about this. So we understand getting involved is now just the next thing is ordering equipment, and even there's an issue in the marketplace. If you don't run parallel processes, you're sitting in a situation where you want to start your mine, but your equipment can only come in 6 months' time. So now you stopped again. Now you've gone and committed to the market going, we're starting in January. And be like, fantastic. We get there, it's like, oh, there's no equipment. So now we're sitting there for 6 months and we can't do anything to report, and then the stocks don't perform well because you haven't delivered on what you've said. So we understand that complexity. So we've gone ahead, run our parallel process before we've even gone to market. We understand exactly what we need to do on these projects before we even go to market.
Okay.
And then we go to market and start building the story, start building exactly where we want to go with these things. And as I said, early delivery is part of the commitment, that we've got for ourselves, is we have to get into cash flow.
If I were to ask you what your difference is then, I mean, I'm getting the sense you know the ground very well, you've got the history there, you're a nimble company and you build teams. What is it that gives you the difference, you think, aside from or away from the big boys, let's say? Why do you think you've sort of got it down better? Is it because you're looking at it from a purely business case? You mentioned about keeping overheads low, that kind of thing, purely looking for a rapid turnaround, really rapid return. So what is it that gives you the difference? Is it just how the projects you look at, or is it the approach you have on the ground, the skills you have internally? What do you think?
I think it's a combination. It starts with the project, right? And like I said to you, it can be very complex if it's a long-term, complicated project to start. So I think that's where we avoid those projects.
But the big boys would go for it.
Yes, for sure. I mean, listen, it's because it's got 500 million tons of ore body. They're going to list it. It's going to look very magical to their future prospects. It's going to be blue sky. They're going to get into that nickel in 5 to 7 years. It bolsters their share price. They're happy. They're going to capitalize on it. They've got the balance, the cash balance to do that. Or they can pull in $3 billion to start a project. BHP Billiton I'm talking about, on your majors. Okay, so they've got the ability to do that.
So it's a much longer term mine.
Much longer term views. There's no ways any of the majors are starting mines in the time periods we're starting them. It's impossible. And it's not putting it down to that they don't have the technical ability or anything like that. It's just their red tape. It's how they process it. They've got to be very careful. They've got to be able to not make mistakes at their size, because it can be a detriment. 5-10% of their stock price is huge, right? So security, safety, environmentals, all of these things are like high up on their list. Unfortunately, they have department for department that process these things and take several months to do something that we would take a month. And I'm not saying you pass your environmentals in a month, I'm saying to make decisions on those things. And we go through the same environmentals, the same security and safety, everything that they do, we go through the same thing with consultants that are registered, making sure that that is above board and accredited, and then we make a decision to move on it. So, as I said, it starts with the project, then it comes with the ability to operate that project. And we come into it from that knowledge to get into cash flow fairly quick. So I looked at the Marula projects, I looked at all those projects and said, well, my first question was, how complex is it? It's literally the first question we ask. Like, is it going to be a lengthy process? Is it going to be years into this? And when Jason told me what he needed in the period that he needed it in to get to where he needed to go, everything that he said was 100% correct when I watched back on what he was saying. And we just solidified that and said, you know what, it can be done. And we proved that we did it. And I think Blesberg is a perfect example of that, where what he said, he delivered. Machinery, equipment, plants, infrastructure, mining, drilling, JORC, everything's done within months. You don't hear those stories ever. So it's a unique story.
It is. And on your side, on QGC side, would you? I guess you wouldn't have any plans to list the company, or maybe
interesting question. So
with what you were saying about what sort of complexities that perhaps brings.
So yeah, we are looking at a very big group structure in the future.
Okay.
That would potentially be listed.
Okay.
We've got obviously 14 metal projects, all in the green space, very, very large, vanadium, titanium, obviously the graphite and copper. So we've gone and tackled the 7 top metals in the world on high demand at the moment. And the idea is to get those to profitable status. The idea is we've got a 5-year window to get them up to a specific EBITDA that we're chasing. And that's something that we are aggressively chasing. So Marula and Neo and Shuka are stories within the big story. And we kind of are chasing a much bigger story here that's going to solidify everyone's positions. And we're chasing inline off-take lines with guys. So all of the majors, I can't mention their names, but all of the majors, we are going direct for nickel, copper, lithium, and we want to be an end producer for those as well. Okay. So we want to be producing carbonates. We want to be able to produce copper and sell it to your major companies around the world, not use brokers and various things like that and go through rigorous processes of having just a ROM product or crushed product. We want to be an end product producer, basically.
And you want to do that, you want to effectively build almost a mining giant here of lots of different success stories in, the green metals, as you said, not in coal where you came from, but in the green metals where, it's pretty obvious that's where I think that the future.
So we're transitioning, and I think that's why, we call it the energy transition phase that we're in. Going from coal, which will still be around for the next 15 years, in my humblest opinion. It's not going away anytime soon, although banks, institutions are going, this is what it is. But we still need that energy. The world still needs that energy. America still needs that energy. But the transitioning into metals is a very exciting space to have come into it at where we did. It's very different to coal, where there's negative aspirations on the markets. Whereas where green metals and metals going by 2030, where everyone's got a transition, is aggressive. They've got a specific quota to meet. Whether they meet it or not, the funds have to go in there. And everyone's talking about developing that sector.
Purely Africa focused, will it be?
We are looking at one or two assets outside of South Africa and Africa. But most of your good assets, and I call them the low-hanging fruits, and optimal assets we're finding out of Africa.
Well, I get a feeling that Africa's got a great future.
I think it's got the future. I think that there's so many unexplored territories, strike rates for all these metals. People are going to DRC, they're going to Tanzania, they're going all over Africa. They're finding these massive deposits. And I think we're very mineral rich in Africa. 10 years ago, 15 years ago, operating that space was complicated. But now we've got local operators, like Jason, who's in Tanzania, understands the lay of the land, understands the government. There's a lot of safe areas now. The governments in Africa have transitioned a lot, so investments are safer. And we understand the jurisdictions we're operating in, we're very protected. So there's no risks in the territories, or no risks we see envisaged for the next couple of years happening in the territories where we operate.
Okay. And just a final thought, you talk about wanting, you've had thousands of % return in some of the projects you've been involved in. You're looking for something similar here. What if I was to ask you what ROI, return on investment, you would like, or what would success, it's difficult to ask an entrepreneur, what would success look like? But just thinking on Marula, Shuka and Neo, what are you looking at, aside from bringing it into production? Are you able to put a number on it, or are you able to define, do you talk about unemployment in Africa? What's sort of driving you? What would you like to?
So as I said to you, I think you can latch on to what I was trying to say, is that we're looking at a much bigger player. For that to happen, we have to be mid to large scale mining. So aspirations to turn these projects into mega projects and bigger projects is definitely on the cards. We don't want to see ourselves in the penny shares. We want to see ourselves in the pound shares. And that's my aspiration, is to build those companies to that point. Proving out these assets is everything, of course. But is the valuation going to be a true reflection of what it's worth? That will be defined by its cash flows and by its profitability. So I think I really want to get there as quick as possible to prove the point that where the company should be evaluated. And once we do that, I think it's going to change the dynamics of how people see these shares in the shortcomings. And that's really where my mission statement is to get it up to a point where I'm proud that I'm part of something that turned from a 2.5 pence share to a £2 share. And that's kind of like where the wish list would be. We've just got to get there. And I think that by putting money, boots on the ground, technical, everything into fast track is really what we've done. And I think within 2024, we'll start proving those values out. It's very important we do that, of course, so everyone can feel comfortable with where the share price is going and the direction that it's going in. So we've got to first prove that out. And that's going to take us a few months. And then once we do, I would love to see where it goes from there, like how people, sort of latch onto the future prospects. Because in my opinion, it's a long-term play this. People can snatch in and out. Sure, you'll make some money. But I understand what I'm busy with. And like I told you, I'm not selling my shares. So I know what we're holding on to, and I know what the values are in the future. So it depends where you enter that is where you're going to have the success for yourself.
Quinton Van Der Burgh, thank you very much for joining me.
Thank you very much for your time. Thank you.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.